Hello everybody, my name is Willem Lombard and welcome to the product-specific training for tax risk insurance, which is aimed at authorized financial services providers. We hope you find some value out of today's training. Just before we start, some administrative arrangements, if I may. Firstly, following this session, you will be required to complete the product-specific training assessment. It's a short 13-question multiple choice questionnaire. It won't take you more than 5 minutes. The link for it is in the comments, so just click on the link below on the comment section. It will take you to the Microsoft Office Forms facility where you'll complete the assessment online. Then after the completion of the assessment, I will then send you your certification. The other thing is you must please make sure that your agency agreement, your broker agreement is in place for tax risk insurance. For this, please send us an email to info@taxrisk.co.za and we'll then make the necessary arrangements with you to make sure your agency agreement is in place. And then also the training material, the information brochure and the application forms we will also send to you. So again, just send us a note on info@taxrisk.co.za and we'll make sure that you'll get the necessary stationery for you to be able to advise your clients. That stationery we will be discussing during the course of this presentation, and then afterwards we'll send that to you once you've sent us the email to info@taxrisk.co.za. Right, let's get into the training then. Right, my name is Willem Lombard. I'm the Managing Director of Tax Risk Underwriting Managers. Today is a product-specific training session, right? So this is the underlying value proposition. It's effective insurance against SARS tax audit and related disputes. And this is the important part. If an individual, business or trust is selected for audit by SARS, or if there's a dispute about a tax reassessment in terms of which SARS is demanding additional taxes from the taxpayer, then tax risk insurance will appoint and pay for the team of tax professionals to deal with the matter. And this ensures a fair and favorable tax audit and dispute outcome. So it's a protection policy effectively. If one of your clients, if it's a business or an individual, if SARS selects them for audit, or if SARS sends them a letter and says, listen, my friend, you owe me R1 million additional taxes, two things effectively happens. One is the blood drains from their face because they're about to get audited from SARS, or they realize they owe SARS money, and more often than not, they don't know why. And the second thing that happens is they pick up their phone to their tax accountant or the tax attorney and say, please help, this has happened to me. And of course, the tax attorney and tax accountant will say, of course, we'll help, but who's paying, right? So effectively, that's what the insurance policy does. It appoints and then pays for that team of tax professionals to deal with the matter. And we'll get into some examples as we go. So first things first, I'm going to show you a little video here. So let's see.
So you do everything right. Pay your taxes on time and maintain your records. You even have a good accountant to check and double-check your tax returns. This doesn't guarantee that you won't be audited by the South African Revenue Service. You see, no matter how perfect your tax documents are, SARS is looking for ways to increase tax revenues, so they are looking for non-compliance. And they have tons of ways to determine if you are high risk. Let me rephrase that. It doesn't matter if you aren't non-compliant. It only matters that they think that you might be. And trust me, if they are going to look through your records, the taxman is clever enough to find even the smallest error. And if they think they found an error, they will tear apart your files. And then they hit you with a reassessment. Sometimes they don't even tell you why you were reassessed. You just get hit with a notification that you owe them additional taxes. They might even issue a garnishee order and take the money right out of your bank account. So, if SARS issues you with a reassessment, you have two options. You can pay the reassessed amount and penalties to make it go away, whether you're wrong or not, or you can stand up to them and prove you did nothing wrong. The best chance is for you to have your accountant or tax lawyer go to battle for you, which might take weeks or months, and all that work will cost you an arm and a leg in accounting and legal fees. But there's a better way. If you are ever selected for audit by SARS, or if there is a dispute between you and SARS about an unfair reassessment whereby SARS is demanding additional taxes from you, then Tax Risk Insurance will appoint and pay for a team of highly qualified and experienced tax experts who will fight the case on your behalf without racking up tens of thousands of rands in accounting and legal fees. This team can include leading tax accountants, tax attorneys, and even your own accountant as may be required to ensure a favorable and fair tax audit and dispute outcome. It's a perfect win-win situation for everyone. So don't wait. Cover your business partners, your trusts, and yourself with our low-cost tax risk insurance, and never worry about a tax audit or dispute again. Do not submit another tax return without tax risk insurance. Speak to your broker to get a quote now. When it comes to your taxes, Tax Risk Insurance gives you the peace of mind when you need it most. Additional information on key product features are available on the Tax Risk website, www.taxrisk.co.za. Tax Risk Underwriting Managers is an authorized financial services provider.
Okay, so I'm going to start off with a few statistics. Not that I want to bore you to death, but it does give you a bit of context about why tax risk insurance is becoming more and more important to your clients, right? So this comes from the SARS annual report. The revenue collected in the last financial year was 1.8 trillion rand. And if you look at this little figure at the side here, the previous year was 1.5 billion rand tax collections. So we understand that the taxman is collecting more taxes from a fairly stable tax base in a depressed economy, because the economy is not growing in more than 1 or 2% per annum, and that's significant, right? So this tells us a little story about the activities of SARS. The green callouts here at the bottom shows you where all the taxes come from. So 35% of taxes are being collected from personal people, individuals, you and me. Then a further 25% comes from VAT, and then corporate taxes is a further 20%. So there's a few other small ones: fuel, customs and excise, secondary tax on companies, and other taxes. But the majority we can see then comes from individuals and companies. The volumes processed in the previous year, you can see the growth there. So the top blue line shows the number of tax returns submitted in 2019-2020. It's 17 million. And then next year, the 19 million, 19.1, and then in the previous year, 19.7. So the number of tax returns in the last years hasn't increased significantly. But if you look at the number of audits and verifications that's going on, has increased between 2021 and 2022 from 7.8 to 10.7%. So this tells us more of that story is that there's a lot more going on in the taxman's office, collecting more taxes by just basically doing more audits. So 99.9% of standard audit cases were selected through automated risk assessment functionality. So what we do know and understand from the tax office is that they have a very progressive, very advanced tax management platform. Right? It's one of the best in the world, make no mistake about it. And people are selected for audit, not by people in dark rooms smoking long cigars. It's actually a very automated process. In fact, 99.9% of people are selected for audit by the system. It's automated. In addition to, SARS last year recruited 657 skilled employees. We're not talking about administrative staff. We're talking about the skilled employees, accountants, chartered accountants, and those sort of people. And then in addition, they collected 215 billion rands in compliance revenue. Compliance revenue means is they went to audit taxpayers, and as a result of that audit, they collected 250 billion rand in compliance revenues, which, by the way, is 43 billion rand more than last year. And then the yield emanating from automated risk engine generated cases increased by 33%. So we can see from these statistics that there's a lot happening in the revenue office, and your clients, your commercial lines and your personal lines clients are more and more exposed to tax audits and disputes, right? Who's most at risk? As we said, taxpayers are at increased risk. We can see that from the statistics that even comes out of the SARS office. It's aimed at the small to medium-sized companies, the shareholders and the directors that sit around those companies, high net worth individuals, and then trusts specifically. So why small to medium enterprise companies? Our product is not really aimed at the large corporates. It's more the small to medium-sized businesses. Why? Because they make up the majority of the tax base in South Africa. And secondly, they are targets of SARS. It's low-hanging fruit. And thirdly, these people often don't have the skills, the money, or the know-how on how to fight SARS if SARS says you owe me additional taxes. Right? These are the moms and pop shops. In our definition is 100 million rand annual turnover or less. These are our clients, and these are the clients who do honest business. They don't want any trouble with the tax man, but then from left field, they get a reassessment from SARS and says that they owe additional taxes. And it's very difficult to unscramble that egg. As I said, they often don't have the know-how, they don't have the money, and it's a very stressful situation. And that's why it's our target market. That's what we bring to the party as an underwriting manager in the insurance field. We ask these taxpayers to each pay a small amount of premium into an insurance pot. When they pick up problems with SARS, we are then able to pay for those teams of tax professionals to act on behalf of the client and to make sure that the client gets a fair hearing. You must understand SARS employs more chartered accountants than any other company in South Africa, and your average small to medium enterprise business has none of that, right? So it's a bit of a David versus Goliath battle, and that's the social justice that we try to bring into the insurance market with this product. Right, so how does it work? If your client is selected for a SARS tax audit or related dispute, we will appoint and pay for the team of tax professionals, right? We've discussed that already. This team includes accountants, auditors, tax attorneys, tax specialists, and tax advisors. And we will even include your client's own accountant in that team of people that's on the go. So let's talk a little bit about that. In the case of tax risk insurance, we appoint highly skilled tax professionals, right? So that's highly skilled chartered accountants, tax advisors, tax attorneys that specialize in tax. So it's not your general run-of-the-mill legal practitioner that we bring in. And it all depends on how complicated that specific matter is. Some of these tax disputes or audits are fairly straightforward and simple. We will then get the claim in. We will evaluate what's happening in that claim, or our team of assessors will evaluate what's happening with that tax audit or dispute. And then we might even just advise the client's own accountant to proceed with the matter and then send us his invoice if it's a straightforward thing and we're not too worried about it. If it becomes more complicated and we understand it might even end up in court, we will then bring in outside providers like tax attorneys or tax specialists to act on behalf of the client. Tax accountants are often very skilled at the accounting principles when it comes to these tax things, but poorly skilled in the legal aspects, the Tax Administration Act, the constitution that sits around that, PAJA, and all sorts of other very technical legal aspects of it. And vice versa, tax attorneys are often very bad accountants, but they are very good at understanding what the legal ramifications are of these things. And we must understand that taxpayers have rights and privileges under laws. There is no way on this earth where SARS can issue a client with a reassessment that says you owe me additional taxes and the taxpayer doesn't know why. Right, that would be fundamentally unfair in terms of the tax process, and we see that in our claims office happen every day. That the taxman violates the rights and privileges of the taxpayer. We very often mitigate a claim on the procedural issues. So SARS must have procedurally treated the taxpayer fairly, in addition to whatever assessment they sent. That the client must also be fair. And that procedural matter becomes very, very important, because that's the part that taxpayers least understand, that tax accountants least understand, is that legal aspect. And that's what the skill that the product brings to the party. Right, so what's covered? These are the different categories of taxes that we do cover: income tax, VAT disputes, employment tax disputes. Employment tax, of course, is pay as you earn. Capital gains tax, and then if it needs to go to the tax board or the tax court, to fight it in court, the policy will also cover that. So it really covers all aspects of tax for individuals and for companies, but there are very specific exclusions about what the product doesn't cover. And we'll get to that in a second. But generally speaking, all local taxes are covered, except there's two specific ones that we don't cover. And we'll talk about that now. So the benefits of the product, it's affordable monthly premiums. We'll get to how the premiums are calculated shortly. We have access to South Africa's top tax specialist, because there's really only one way how you fight SARS successfully, and that is to bring the skills that is equal or better than the skills that they have. We remove uncertainty of an unexpected SARS tax audit-related dispute. And this is the fundamental principle of the matter, right? So our clients are all honest taxpayers. We believe all of them are honest taxpayers. They like to plan their taxes. So, right, that's called tax avoidance. So you pay what is required, but you only pay what is required, not more. Tax evasion is when you fraudulently start not paying your taxes, or you evade those taxes, and that's criminal, right? So the policy won't act if there's a criminal aspect for it. So as with any other insurance policy, fraud is specifically excluded. And in the tax definition, of course, that is tax evasion. But tax avoidance is is acceptable. That's proper tax planning, where you avoid to pay more tax than what you absolutely need to. But once you submitted your taxes and SARS comes back to you and say, listen, actually, we disagree with you, then there's a fight on the go. That's what's called a dispute, right? There's a specific way then that you fight SARS in terms of getting away from that fight. And if you don't understand how that works, or you don't have the money to pay a person to understand it works, it becomes a massive, massive problem, and it's stressful for your client. It covers the cost of your own accountant's time, experience, and expertise, and it shows fair tax treatment and audit outcomes, right? So that's very important, is the fairness that we bring to the party. We don't pay for the client's outstanding taxes, right? So if he did underpay his taxes in the final analysis, we will go back to the client and say, listen, you actually did underpay your taxes, and then please pay your taxes. And that happens in about 30% of our claims, where there was an honest error, and then the client must still pay these taxes, right? The policy doesn't pick up your back taxes. It also doesn't pay for the penalties and interest, if there's any penalties and interest or fines that needs to be paid. But what the policy will do is negotiate with SARS on behalf of the taxpayer to see if we can reduce that. And we're often successful with that, especially if the taxpayer is a first-time offender. If it's the first time that there's a problem, SARS very often says, right, we understand there's been an error, and then they will waive the penalties and the interest that's associated with that. Right, so that's the benefits. The exclusions are often the most important part of the policy, right? Most of the exclusions are general insurance exclusions. So you don't need to worry or sweat too much that this is a tax product, that you don't understand tax, because people don't understand tax. This is fundamentally an insurance product, and the basic principles of insurance apply. So things like if you don't pay your premium, et cetera, those normal exceptions apply. I've highlighted a few that's important for the purposes of a tax product, and there's really only 2 or 3 that is particular to a tax product, that you would need to pay attention to, that you would need to memorize, and that you need to talk to your client about when you advise. So what we don't cover is audits and disputes which have commenced prior to the inception of the policy. Right, you can't have a car accident and then buy the insurance. It's a fairly standard basic principle of insurance, but for the following fact, right? So audits and disputes, by their definition, looks backwards. It's retrospective. If there's an audit and dispute that have started already when you take up the policy, that audit and dispute will not be covered, right? But if you take out the policy today, and SARS writes you a letter tomorrow and says you're being audited for last year's tax return, that will be covered, right? So the most important thing, our date of loss, is SARS's notification that there's an audit, or if SARS gives you an assessment in terms of which they say you owe them money. That's our date of loss. So anything that happens before that date of loss is not covered if the policy hasn't incepted. But if the policy incepted today and you get that notice from SARS tomorrow, it will be covered under the policy. So cover is retrospective. The next item we've already discussed, matter where fraud and crime is involved. The policy will not operate if there's fraud and crime involved. And as I said, that's tax evasion in the tax definition. Then we won't cover audits as a result of late submission of tax returns without an extension. That's a fairly straightforward one. And proximate cause still applies. So we will still cover all other inquiries, audits, and disputes. as long as the proximate cause of that is not the late submission of the tax return. The client will still receive the cover. Matters relating to income generated outside of South Africa is not covered. So we only cover the taxes payable to SARS, the South African Revenue Service. So if you generate revenue in another country and the tax is payable to that country, that is not covered. So anything to do with cross-border taxes or foreign taxes are not covered. We only cover local taxes. Taxes payable to the South African Revenue Service. We also don't cover the cost associated with the normal preparation of your tax returns and the supply of routine supporting information. So what that means is you must still submit your taxes as before. We don't pay, we're not your tax accountant, we're your insurance company. So you must still submit your taxes as you've done before. And that includes if SARS asks you for supporting documentation. So that happens actually quite a lot. That happens in between 10 and 15% in all tax returns in South Africa, where you put your tax return in and SARS comes back and says, right, can I please have a copy of your discovery medical aid certificate, your travel log? If you're a company, they might ask for proof of payments for invoices, ask a copy of your payroll, ask for your trial balance. So those are all supporting documentations which you have had to prepare in order for you to submit your tax returns. So remember, in South Africa, we have self-assessment. So you submit your tax returns yourself, or you get your accountant to submit your tax returns with any supporting documentation for it. It's a self-assessment effectively on e-filing. And the counterbalance to self-assessment is this verification, where SARS will randomly pick a sample of the taxpayers and then say, right, please give me the information that you've used to calculate your taxes. Matters relating to customs and excise control is excluded. And this is particularly important for people in the coastal areas where you have clients that import, export things via the harbor. So customs and excise are specifically excluded from the policy. And I want to jump to the last bullet point, if I may. Also, employment tax incentives. Employment tax incentive is a recent exclusion from the policy. What that is the government decided to give companies who employ young unemployed people for the first time to give them a tax break, right? So you can employ these people that hasn't been employed before under a certain age category, and SARS will give you money back for that. It's called tax credits, and which in itself is a very positive thing, but it's been abused, and a lot of these matters are at the moment heading to courts. And we're feeling that we can't provide the necessary cover for this because there's not enough water under the bridge as far as this piece of tax legislation is concerned. Employment tax incentives are specifically excluded. So make a note of customs and excise, and employment tax incentives are specifically excluded. The next one there is where no proper accounting records were kept. If you haven't kept accounting records and SARS comes to audit you, there's really nothing to defend, right? Then we've discussed the last one already, taxes, interest, penalties, and fines imposed to SARS. We don't actually cover the back taxes, interest, and penalties. People are still responsible to pay their taxes as they should. Okay, so those are exclusions. As I said, that's in your brochure, so you don't need to worry too much about it, that you need to memorize all of these things. And it's only really 2 or 3 peculiar to tax insurance. So here's a case study. This is what a typical tax auditor dispute looks like. So this is what a SARS reassessment looks like. Specifically, this is a smallish company based in the northern parts of Johannesburg. This comes from a few years ago already. So she submitted the taxes via her accounting firm. She has a very responsible accounting firm. And then she got this reassessment from SARS in terms of which she owes SARS 604,000 Rand. For this company, as a small company, so this is insolvency, right? And we know with SARS, it's pay now, argue later. That's what the Tax Administration Act requires. You must pay us now, and then you can fight us later. But this will put that company into insolvency. 604,000 is a lot of money, even for the larger organizations. This is 10 to 12 people without jobs. And it's very, very stressful for the client. She then approached the accounting firm, and the accounting firm did various things to try and mitigate these things, but SARS didn't want to listen to reason. They said, pay us now, and then you can come and fight with it. So we appointed these guys, which is a bunch of tax attorneys out in the Eastern Cape, Strandberg, Pieterse. We use them quite a lot. So without getting into too much technical detail, there's two things that went wrong here. As SARS, first of all, asked for this verification information, supporting documentations from the client, which she supplied to SARS, as you must, right? So SARS says, supply the supporting documentation. She did. They asked for so much information, she couldn't upload it on e-filing, and she agreed with the tax official that she will transfer it to SARS in batches, right? Because there was so much information that they were asking. And then she got the assessment the next day. So the legal argument is SARS actually did not pay any attention to the information provided to them, because there was no way that SARS could scrutinize those things with any depth of knowledge overnight, right? Because she submitted in the afternoon and she got this reassessment in the morning. So SARS didn't apply their mind. The second thing that happened is that they issued this reassessment without telling the client why she's being reassessed, why this happens. In terms of the Tax Administration Act, you file your tax return. SARS must then give you a notice if they are coming to audit you. It's a very specific written notice that they must provide you in terms of the Act. They must then audit you and keep you up to date with how they progress. And then at the end of it, they must give you what's called a letter of findings. A letter of findings tells you what they found and why they owe you taxes, right? It's a fundamental principle in law that you must stay informed. And in this case, the client didn't get a letter of findings. SARS just did the audit, sent her a reassessment, this one that we've just seen. Effectively, what they've done is they put the ball into the taxpayer's court to defend itself. SARS says, you owe me money and come tell us why you don't owe the money, which is fundamentally unfair, right? That's not how the legal process works. And so the attorneys reminded SARS of this procedural flaw two flaws in the process. And then at the end of it, the client gets this letter, which then agrees with our argument. And you'd think because you've won an argument, there'll be fireworks and apologies coming out your ears. That's actually not the case. So you get a simple letter from SARS, which says the South African Revenue Service has considered your notice of objection. That's the date your objection against your 2018 tax return has been allowed. And this is the response you get from SARS. Very straightforward, simple, say, sorry, we agree with you. You don't owe us the taxes. She then got another assessment back, which SARS actually owes her now 599,000 rand. So, I mean, it's a very positive outcome. And this is what we like to see for our clients. Not all our clients get 600,000 rand back. The fundamental principle is your client needs to be treated fair. And there's some skill involved and some technical stuff involved, which your client will not understand and will cost them a lot of money to access. Right. Let's get to the product itself, the rating, how premiums are calculated, the indemnity limits. So on the page 1 of your application form is the normal details of your client, name, surname, company registration numbers, etc., etc. On the page 2 is the table of premiums and the indemnity limits, and it looks as follows. So that's what it looks like on page 2 of your application form. So you have one application form in there for companies and individuals. It's the same application form for both. And then you have a second application form for trusts. And we'll get to the trust now. So here's how it works. We rate the company on rate bands according to the annual turnover for companies. All right, so you'll see here from this table, if you're a small organization of less than 3 million rand turnover, then your premium is 249 rand a month. If you have a 100 million rand turnover company, your premium is 1,499 rand a month. The column here on the right says your indemnity limit. So we need to explain what the indemnity limit means. So if you're a small company, your indemnity limit is 250,000 rand per annum or 50 hours of service, whichever is the lesser. So we have this double indemnity limit ceiling. The one is the rand amount and the other one is number of hours. The reason for that is not all service providers charges the same hourly rate. If you are a tax attorney in Sandton, you're probably almost at 10,000 rand an hour. Right, in that case, you'll hit your rand limit quite easily at 250,000. Right, but if you're an accountant, the tax accountant sitting in Pofadder, your hourly rate's probably more to 800 rands an hour, and then you'll have you'll hit the hourly limit first. That being said, we have never hit our indemnity limit. Right, so we've on purpose put the indemnity limit so high that the chances of ever hitting this is fairly small. If you are more than 100 million rand, as you see there at the bottom of this rating table, we ask more information. So on your application form, you indicate what the turnover is. We receive the application form and we'll ask then a few more probing questions of that organization to understand his business a bit better to make sure that we can actually insure that client. Right, so the rating methodology is straightforward. You ask the client what's his annual turnover, and you are then able to determine what the rate is. Important here is the small print at the bottom. Each taxpayer must have his or her own insurance policy. So if you're a group of companies, so you have the holding company, then you have the operating company, it might be a trust in there, 2 or 3 shareholders, which are all taxpayers in their own rights. Each of those taxpayers must have their own policy. So we often write what I call cluster policies. You write one for the holding company, the 2 operating companies, they're all separate tax-paying entities, and then 1 or 2 for the owners of those businesses. And you end up writing 5 policies out of 1 commercial lines one. Personal lines, of course, is a lot simpler. You write 1 for the client, and maybe if his wife is also gainfully employed and at risk, then they also get, and the wife also gets 1. So companies, you often get cluster policies. Individuals, you get 1, maybe 2 for the husband and wife if they are both in high industry. Okay, the policy only covers the 1 named taxpayer. So when you issue the schedule or we receive the application form, the taxpayer that's noted in that schedule, that's the taxpayer that will receive the cover. If you have a large group of companies, and when I say a large group of companies, when there's 10 or more tax-paying entities in a group, and it becomes quite administratively cumbersome to fill out 10 application forms, then we can fill out 1 application form, list those 10 taxpayers that's on there. And when I say list, we ask for the name, tax reference number, company registration number for individuals, name, ID number, tax reference number, and then the annual turnover. We write them separately, but we write them on 1 policy. But generally speaking, 1 taxpayer gets a policy. There's the excess under the policy, which is 10% of the claim, minimum 1,500 Rand. The claim being the amount we have to pay these service providers to offer the service. So the excess under the policy is 10% of the claim, minimum 1,500. And at the bottom, finally, for the rating purposes, claims are limited to 100 hours per any 1 claim. And we often find that. So SARS will come in and they'll do an income tax audit. And if they find something, they'll be back. I can guarantee you for a VAT audit, and they're probably auditing one of the individuals in the company also. Right, so as long as none of those individual claims are more than 100 hours and collectively they're not more than 300 hours, we are fine. So effectively, as I said, it's reinstatement of cover. The client can claim as many times as he wants, as long as they are not each claim more than 100 hours and collectively per annum not more than 1,000,000 of 300 hours. That's for companies. We now have individuals. As I mentioned, this is for the high net worth individuals, that owner of the company that sits around that company, the shareholders, the directors, not so much the salaried earners. As you see, these products are rated at a fairly high premium level if you're an individual, because we are catering for the high net worth individual. So if you earn less than 2 million Rand, your premium will be 235 Rand a month. Income means taxable income of the last financial year, right? So that income that you're paying tax on, that's what we use to rate it. And the indemnity limits here at the bottom work similar to the commercial lines one. And here is then your second application form is for trusts. So as I said, we have 2 application forms. One is for companies individual, same application form, and there's a separate one for trusts. So we have 2 types of trust. One is called the trading trust, and the other one is called the passive holding trust. Passive holding trust, it says so as it says in the name, a trust under which property held by a trustee is used for passive investment. It might earn some interest, there might be some disbursements coming out of the trust, but it's not a business. It holds assets. A trading trust is a trust that operates like a business. And as you see, we rate them similarly as for companies. If it's a trading trust, it says on the description, a trust that is actively carries on business or trading or is used in the conduct of business. Here's the indemnity limits similar to the top one. It's interestingly, that passive holding trust is a flat rate of 275 Rand a month, irrespective of how much assets is in that trust. And the indemnity limits are the same, or one size fits all, 250,000 or 100 hours. So the next one, many of you brokers are on a vendor system, a Teal or a Flexi or one of those vendor systems. So our product is available as a VAP on most of those vendor systems. Right, so if you're not on a vendor system, clearly you won't have access to this product because you need to be on the vendor system. You can add this product to the back of a commercial lines or personal lines product. If you want to access this product, you have to ask your vendor service providers, your representative, to open it on the system for them. Right, although it's available on the system, it's not automatically available to all brokers. You must ask for it. You must have your agency agreement in place for this. So we call the VAP product step in. It's the same terms and conditions as a normal standalone product, but the indemnity limits are lower and the premiums are a lot lower, right? So it's really what's, as it says in the name, it's a step in product for people that just want to buy the basic cover with very low indemnity limits. They buy this product. The upside of a VAP is easy to sell, right? It's just a click button on your system, and you can attach it to a commercial lines and a personal lines policy, and you pay it over to tax risk via board run. The downside is the indemnity limits are low, and there is a threat that the client can run out of money before the matter is settled, and then he'll be expected to fork out of his own pocket, and we all know and understand that that can be problematic. Also to note is that the step-in product is only available to the smaller companies, and we'll tell you now what it looks like. So step-in companies on vendor systems, here's the premium rates. That's a company less than 20 million rand, you call it the standard product, and your premium is 100 rand a month, annually is 1,200 rand a month. So annual, monthly times 12. The indemnity limits are 110,000 rand per annum, limited to 67,000 rand per claim. Now you'll be surprised how quickly you can blow out 67,500 rand per claim. It can't be a big issue. Fortunately, this product is aimed at the smaller companies, the 20 million rand turnover companies and less. So the indemnity limit should be there to cover 50 to 60 to 70% of your clients up to the end of it. But your client has to understand that this is the indemnity limit that he'll have. And if it blows through that ceiling, then he's going to be in for the balance of it. So as it says, it's a step in, it gets the client in the right direction. The upside of this, of course, is that the client will be able to utilize our skills to start that audit properly. We found that in these type of disputes, how you start it is how you end it. If you start it poorly with the wrong advice in the wrong direction, it's going to end poorly at the end. If you start it properly, then you'll end it properly. And so, you know, that's the upside of having the step-in product that has limited cover, but at least you know your point of departure is 100% correct. The executive gives a bit more cover. So the executive for companies is for companies less than 50 million. So you can see it's a bit higher. The premium is 270 rand a month, and then indemnity limits is 300,000 per hour, limited to 150,000 rand per claim. So it gives a little bit higher cover for the little bit larger organizations. If the company is more than 50 million rand turnover, they cannot access the VAP product. You have to write a standalone classic product on the application form. Okay. Same rules apply. Each taxpayer must have his or her or its own policy. So if you have a commercial lines policy and there's more than one company in there, then you select that option on your system 2 or 3 or 4 times, or however times you need it. You can write a personal lines policy on a commercial lines schedule. They will all be available. You'll notice on your schedule there's a drop-down menu. So it says personal lines, commercial lines, and it'll ask you standard or executive with these premiums in there, and it will auto-populate your schedule with a summary of the cover on your schedule also, the most important aspects of the business. You then attach your policy wording to it, and you send it on to the client. I will provide you with the policy wording. Yes, for individuals. So for individuals, if you earn less than R1 million a year, you can see this product is very, very well priced, 43 Rand a month. And this is now more aimed at your salaried earner, right? The person that earns a salary, but he still wants protection, he can have this product. It only costs 43 bucks a month. You can attach it to your personal lines policy. And then indemnity limits is 50,000 Rand per annum, limited to 25,000 Rand per any one claim. For your higher net worth individuals, it's the executive product. So for people that earn less than 3 million Rand per annum, their premium is 99 bucks a month, and then indemnity limits is 110,000 or 67,500 a month. Per claim. So that's as far as the vendor system, what we call the step-in is concerned. As I said, the terms and conditions stays exactly the same. What's included, what's excluded in the cover stays exactly the same. The only difference between the VAP and the standalone is the premiums, and the indemnity limits are way lower. And secondly, there's no upfront underwriting, but all the normal terms and conditions will apply. Right, I'm coming to the end of my presentation. This is the role players in this business, ABC Brokers, which is you. We are then the underwriting managers as tax risk, and we have the mandate from Bright. If you have an existing Bright agency agreement, we don't need to write another agency agreement for tax risk insurance. What we do need to do is add an annexure to your existing Bright agreement that makes tax risk insurance a product category in your existing Bright agreement. And please make sure that that's in place, because your clearly from a regulatory point of view, your agency agreement must make provision for the fact that you are writing tax risk insurance business. And that is all. So you need to complete the product specific training, as I said at the start. It's 12 multiple choice questions. You just click the thing and you submit it electronically. And then if you pass it, the pass mark 70%, you will get your certificate from me. So that'll be it. All right, guys. Thank you for your time and good luck.